So the prices creep up in quarter two, and at this moment, now that if we see even as prices plunge, so how is it going to happen? And in the next few minutes, right, I'm actually going to show you three dynamics in today's market that today you as a buyer or investor, you must watch out, as well as the two traps that I'll be reviewing in this video that you must continue to watch on. All right, so this is Coach Edmund, and I'm here to actually share with you regarding the quarter two URA data index. But more importantly, we are going to dive in deeper to unveil two traps that you and me as homeowners must know in order to move forward in your next property plan. So I've actually done quite a fair bit of research regarding this, and if let's say today is your first time joining us and you have not subscribed to this channel or even liked some of the videos before, this is your best time, and this can actually help me to be motivated to do even more videos and research insights of the property market for you at your comfort. All right, so very importantly, I want to really cover this aspect because right now with quarter two data out, okay, we are seeing that today the flash index has a really positive by about 5%, and it's a very small increase on quarter to quarter, but then there is a 64% sales drop, and I think we all want to kind of understand what is actually happening here, and that's why we're going to dive in deeper into this information. So let's just cover really quickly to give you an overview of what is actually happening. So right now, if you can see, we are having the quarter four from 2024 onwards, and it has very comfortably increased over the last two quarters as well, and it went from 211.1 to even 212.2, showing an increase of about 0.5% quarter on quarter. And if you go to the right side of the data that we have already broken it down, not just about the overall price index, but in order to us to kind of dive in deeper into the different segments of the property market, then we can see that even though quarter on quarter it went up about 0.5%, the year on year change is about 3%. So we are still fairly comfortable in terms of the quarter on quarter growth. So one of the key things that you must understand is sometimes a lot of homeowners, we are all very concerned that today, if let's say the price index, how would it affect me as a homeowner? So this is where you must understand where the prices are at this current moment, and tracking the price index give us an indication of how moving forward are there going to be any injections of cooling measures or any intervention from the government. Why? Because there's this rule of thumb that when we are doing our research, what we realize is that today, based on general price index that we have monitored and we research, as long as the yearly price index do not cross double digit, okay, that means it don't cross above 10%, then we are actually very safe with any injections of new cooling measures. So if we have tracked the previous cooling measures, a lot of times when they're hitting maybe the 8% or even 9% range, that's where cooling measure comes in. And at the moment, we are still hovering way below the double digit. And this also gives you a quick indication to understand that today, based on landed property, you can see the quarter on quarter is about 0.7, and the negative year-on-year percentage change gives you a very high indication. And knowing this, if let's say, for example, for the last 2 or 3 years, you have been kind of exploring to landed property, but because the prices has went up so high that you are being priced out, perhaps now you want to revisit this element into property in the landed property segment because the price index has actually adjusted slightly. And as well for the non-landed, generally is also about 0.5 and 4.6%. And that's where we will break it down further into the different regions. And mainly the CCR is also at about 4.6%. RCR is at 4.4, as well as OCR is 4.5. So the last year-on-year change is not going to be too much of a difference moving forward as we are seeing. So this year versus last year's, you can see that although there are a lot of launches going on, there's a lot of noises in the economy, the property market is rather very muted, but there are still activities going on. And let me just give you a quick overview of what happened, because a lot of times when we are seeing some of this data, right, the first thing that we are thinking about is that, oh, the property market is very slow because of economy situation, nobody is buying property, nobody is selling property. But if you, based on research and data, right, you can see that by quarter 2 2025, we have sold about 1,220 private new homes, and these are all the new launches. Largely, it's a large drop. Okay, it's a large drop from previous period. Why? Because previous period we had about, let me just take out the data, right? We have about 3,375 units being sold, okay, for first quarter. This is first quarter. And then now we only managed to transact about 1,220. So this is almost a 64% drop in terms of volume. So the key thing is that why is this happening? We must all understand. So also given the limitations of new launches that was launched during the Chinese New Year period and after. So there's usually a kind of downtime during that period, and a lot of developers are not putting out their units for sale. So this is Q2 that is happening. And if you want to fast forward to Q3, I can already make a projection. Q3 will definitely be much, much higher in terms of the new launches being sold. Okay, later on, we will uncover some of the details of what is in the pipeline. So you as a homeowner, you kind of use all this data to help you guide yourself into your property decision making as well. All right, so then the next information that you can see here is we have also about 3,543 resale and subsale units. So out of this information, about 211 units, okay, comes from the subsale. And that translates to about maybe about 5.9% only out of the entire resale and subsale. So this percentage has also dropped, okay, from 34% downwards to so little in terms of the numbers of units. I think largely because there's not a lot of subsales going on at the moment. All right, a lot of the units are already considered as resale. They are already more than 1 year after the TOP. So they may be classified, still new, but classified as resale. So these are where you need to be very proficient in terms of understanding which is the type of properties that you are purchasing under resale or subsale indication. And one of the key things is that we also must take note that there's a lot of supply coming into the marketplace, and we are talking about more than 9,000 plus units, okay, in the second half that's been confirmed. And a lot of the units right now has already been taken off the market, okay, right now, because whatever that we're going through is the Q2 data, but right now we are already in Q3, and there are various projects that has already been launched and seeing very good results. And listen on and watch on, because we're going to uncover and go in deeper into which are the current properties in terms of their percentage sold and how many units are balanced in the marketplace. Because sometimes what we always very concerned about is that, oh, there's so much supply, 9,000 over units. But in the next couple of years, we will have almost 50-something thousand units coming into the marketplace. Then a lot of us, when we are looking at all these big headlines, we'll be very concerned. Oh, there's going to be a huge oversupply. And when we think that there's huge oversupply, what happened to prices? We will always think that the prices is going to come down. So that is on a surface research. And if you really dive in deeper, then actually some of the data and numbers are actually telling us a different story. Okay, so this is where we are here as your consultant advisor to kind of guide you through and see all this access into all these data and numbers that you potentially cannot get from anywhere else. Okay, so with this, the supply coming in, one of the key things is do not be overwhelmed. Okay, but at the same time, pace yourself in terms of what your objective is in terms of your property. I always don't believe in entering the property market with no direction, no understanding. So this could be a good time for you to kind of pinpoint where your entire property journey is going to be and how are you going to navigate through this process. So one of the key things that I think a lot of people are always asking is also, how will the new SSD that happened in July affect, changing from 3 years to 4 years? So I'm not going to cover that in my video, but if you want to give yourself some time, after you watch this video, of course, you can continue to actually click on the other link where I actually deep dive into how SSD is going to affect us as homeowners or investors moving forward. Whether this change of 3 years to 4 years, does it really have an impact on us in regarding our property journey? All right, so watch the other video that I put in somewhere. Okay, and so the key thing that I want to kind of give you guys a quick overview is also right now, these are some of the launches that recently had just been done in Q3. So this is also the reason why when we are tracking not only just the post-launch, the pre-launch, the GLS land sites, we will have a glimpse about into the future. We potentially could have a magic crystal ball to let us see how will the numbers turn out in Q3 moving forward. So Lynden Woods, at the current moment, these are all as updated as today. These are the latest information that you can see. For Lynden Wood, we only left about 10 units. Okay, it has already sold close to 98%. And the balance units are the 3-bedroom and the 4-bedroom. So there's limited stocks if in the event if you are looking for Science Park area. But besides Lynden Woods, of course, there's also the Bloomsbury and the Hill and One North that you can also consider to see which is a better purchase for you in the longer run. For this area, I always suggest if you are looking at a slightly longer term where you want to have better rental returns, I think this location is where you can actually pinpoint. But do also do your own research more, or maybe you can seek out some help from us that to kind of govern that. Are there any other areas that could also potentially give you the same kind of returns? All right, of course, you can remember Robertson Opus being a 999 property. I think it did very, very well on this launch and everybody was surprised. And up to date, they are already almost 44% sold. Okay, largely a lot of the bigger units are the ones that are being taken out. Okay, so you can see that the 2-bed study and 3-bed flexi actually are the ones that have been sold first. So this also gives you a glimpse about how buyer behaviors have changed in the different locations, and not forgetting the other one, which is Upper House, Orchard. Even Orchard Road crossing the $3,000 mark has already sold 63%, close to 63% as of today. So moving on to the more recent launches. All right, I've done my videos in depth into the Prominent Peak as well as River Green. So Prominent Peak at the moment already sold about 54%, and they left with only about 268 units. As well as River Green, 87% and left with 66 units. Of course, we have the Canberra Crescent Residences. Out of all the launches, Canberra is the one that in terms of entry point is one of the lowest, and they also sold about 40%. So I believe Canberra Crescent Residences potentially could be also a mirror image to what is upcoming, which is Springleaf Residences. So if you want to see a deep dive of what I've provided you in terms of the comparison of how will Springleaf Residence turn out to be, would it still have the same kind of results as Canberra, or would it follow some of the CCR projects that they will be over 80% sold? Then you want to watch on the video that I put somewhere on top that you can actually go in and dive in deeper, because I share a certain benchmark price regarding Springleaf that you must know before you commit yourself. Okay, I think this is very extremely important for every one of you who are going for either Springleaf. So to give you a recap on some of these recent summit bids, why are we looking into the sales GLS launch sites? Because this gives us a projection about what's going to happen in the next 6 months or even 1 year based on the prices that the developers has already paid for. Right? They have bid for it, government has actually tendered it and accepted their price. And this also gives us a glimpse of how future prices potentially are going to be. So the most recent one is CDL, been very aggressive recently. All right, submitted 771 per square foot per PPR. In terms of the Sanja close EC, remember this is an EC site, it's not a condo site. So with 771 per square foot, right, we're talking about on average easily above $1,800 per square foot. Okay, so you need to expect now. I think just a couple of years ago, we were talking about EC being $1,200 per square foot is very expensive. Right now, we are seeing things even moving even higher. So the question is, why the CDL are so aggressive during this period that they also went on to even take on a Woodlands EC site at the same time. All right, so this is also a leasehold property site. They bid $782 per square foot per PPR for this EC site. And being a plot ratio about 1.7, and they can yield maybe about 420 units in total. And this also, on an average, it will translate to close to maybe 1,800 to 1,900 per square foot. All right, so ECs in Sanja as well as Woodlands are already commanding this kind of average prices. Okay, like I said, we are using the land bid price and using certain form of calculations that we deep dive into to kind of estimate their break-even prices and how much they potentially is going to sell it for. And if you look at this tool, then you will realize that the land cost that they have purchased are actually already 10% higher than Arela, which is in Tampines, the most recent EC launch. So this gives you an idea that, hey, it seems like every single time when there's a launch, the prices only creeps up. So if the developer prices keeps going up in terms of the land bank and the government accepts, then how will the prices moving forward in future going in reverse direction? So this is also something that we need to be very, very concerned about. We need to be very realistic that this is actually happening. And I always share with my clients that today, the earlier you can accept the reality of things, you are able to make a more sound decisions without all the fanfare, without all the emotions inside, and just look at it that, hey, this is what it is. Let's move forward with it. All right. So, so that's why I mentioned CDL has been very aggressive. Besides the Sanja as well as the Woodlands, previously they also did bid for Lakeside Drive GLS site, and they bid 1,132 per square foot per PBR. So you can see a huge jump. The EC sites are hovering about 700 plus per square foot per PBR, and when they move to condo, it's almost a 2 times in terms of the land purchase. And this site, why is it very favorable? And I think the CDL, they bid for this land quite aggressively also, is because this is one of the very rare sites that you'll be near the Lakeside MRT. Given the take that based on this plot ratio is 3.6, which means you can build very, very high, and it should yield you about 575 units. So the interesting part for this development is that it's going to have a first story of commercial space as well. So it's a mixed D. You have the first level commercial as well as residential, making up to about 575 units. So if you look at the top bid of this price, this unit versus Sora versus Lake Garden, they are slightly away from the MRT. So that's why CDL very aggressively going for this property, because you will be one of the closest to the MRT, and that is definitely still a draw among Singaporeans who are buying for their property. You see, so 575 units, it'll be a very how should I say it? Very grand, because it will be 5 blocks of 16 stories. Okay, 5 blocks of 16 stories, and with the ground floor being retail podium. And what they are trying to achieve is to have the unblocked view of Jurong Lake Garden area. All right, so I believe this is going to be very exciting. And also moving forward to understand how future prices are going to be, Cindior, okay, also submitted a top bid about 1,432 per square foot per PBR for Holland. So interestingly, CDL bid 1,300 plus, 1,100 plus, and then Cindior almost $300 per square foot per PPR more for a CCR project. And they bid 22.2% higher than the last person. Okay, so they are also very aggressive with this. And this will definitely translate to a range of pricing close to maybe about $2,800 per square foot to about $3,000. And I believe one of the reasons why Cindior was very aggressive in this Holland is it seems like they just want to get something in CCR. Okay, to start their new market share in the CCR market, because they lost out Dunyan. Okay, Dunyan was bidded by Fraser's Property, JV combination, and they successfully bidded for Dunyan GLS. And the fact is that when I was doing some more research is that they Cindior was the third. They are the third highest bidder. Okay, so they are about 6% off from the highest bidder. So maybe that one make them a little bit sour, and then they say, okay, let's go all in. And then in the end, they submitted 32.2% higher. So these are very important to also understand where the other developers are seeing the different sites. What kind of price point are they putting themselves into the marketplace? Because why? Because that will kind of give us a very different direction. So imagine if you have a site and there's not a lot of bidders, you end up being the only few, and your comparison on the other developers are so much difference. So does it mean that you outbid the rest, or you did your sums wrongly, that you overpaid for a land? I don't think anybody will accept that. They come back and say that, hey, I think you overbid the land. Can you bid lower? It's too much. I don't think it will happen. Yeah, so this is also another indicators we are using as a reference point. Of course, it's not 100%, but at least it tells us a certain narrative that if, let's say, the percentage differences, that means generally a lot of developers are maybe eyeing this location, and this is the value that they foresee. And I'm sure they have a lot of scholars behind the scene doing some of all this projection and calculation as well. All right, so this is something kind of interesting for us to look at too. Then if we look at Chuan Grove, also recently was also bidded, and if you can recall, it was sold at $1,376 per square foot. Compared to the if you talk about the recent few launches during then, Bayshore, okay, Bayshore was transacted about $1,388 per square foot. So it's quite on average about that same batch of GLS, right? And right now, the key thing is that today, if you are looking at Chuan Grove, and if you see how Chuan Park is performing, averagely, if we are talking about $1,300 per square foot average, right? That means your launch price potentially should be about $2,600 thereabout. And I think one of the most highest confidence is because Chuan Park was doing very, very well. If you can remember the craze in November 2024, where Chuan Park, Pine Grove, EOK, all this was inside the big three that they're all comparing. Actually, big four, big six. Actually, there were 6 launches during then. Yeah, so then, so the key thing for Chuan Park, what happened was it was sold 76%. All right, on launch day, very hot project, and on an average about $2,579 per square foot. Okay, so this is what happened then. So let us move forward today to see how the performance is happening. So for Chuan Park, as of today, they have already sold 84%, left about 144 units, and mostly are the, let me just clean this up so that you can see better. Yeah, so mostly are the what? We still left the 3 bedrooms, as well as the 2+ study. Okay, all the big units are all almost gone already. So this also allowed you to understand that if today you are entering into the property market, what are the key things that you should look for? So you must really continue to stay on to the end, because I will give you a glimpse today if you're entering into the property market, specifically what kind of price point, what kind of size you should be going for, and the 2 traps that you really, really need to avoid by having this data, right? That moving forward, whether you're going for resale, whether you're going for new launch, you need to be aware before you fall into the wrong trap, right? So coming back, here you can also see Chuan Park, based on the average per square foot right now, is hovering about $2,590 per square foot. And the highest it has went is $2,785 per square foot. So for Chuan Grove, that has purchased a land at about $1,376. So we're talking about maybe about $2,600 per square foot, which is where the prices are at this current moment. And I believe this is a very fair purchase of land. Okay, so that's where we need to kind of uncover what is happening using GLS as an indicator, our past launch, the volume as an indicator, that even though today we are seeing that the sales volume has dropped, but does it equate to price drop? That is always the big question that you must acknowledge. So volume drop doesn't mean price will drop. So we must really monitor it and dive in deeper to understand the core logic behind the rising prices that you and I were experiencing right now, and it's sometimes quite scary. So at the same time, we also have done some research, because I myself, we are also very sometimes confused, right? Hey, why is it these things are happening? And that's the reason why we like to go CSI, we like to uncover, we like to be more curious about certain things, to kind of give you guys a more research-based data and numbers to make sense, okay, and so that we can be safer to make a decision. So what we have done was also we went through doing a survey. Okay, we went through doing a survey to understand what are the current buyers' sentiment going to be. So we did a survey on that, and we have key findings that I'm going to share with you. So I'm not going to share everything that we have done in the report as well. Okay, so I'm going to give you guys some key important factors. But if let's say today you really want to kind of take a look at the report, then you want to stay on all the way to the video, because I'll share with you how you can actually get this report from us that we have done with the surveys of the different segments in the property market, and how you can actually tap on this report and these insights to help you plan your next move. I think this is very, very crucial. All right, so let's come back to this. So these are some of the surveys that we have actually done. Okay, like for example, some of the 70% of the respondents actually intending to make their move in the property market. Okay, regardless of the market situation, they are still going to kind of look into the market issue, and some of them are looking for new homes or even investment properties, and many of them are actually looking in the next 6 months. So from a pricing expectations, then about 3/4, 75% of the respondents do not expect the private homes and HDB resale prices to fall in 2025 and beyond. So I mean, these are all not coming from our mouth. It's really from the research on the ground to kind of understand where the market is heading to and what are the sentiments of buyers and their behavior. I think this is very crucial for us to use this extra layer of data to guide us through in terms of how we're going to navigate into the next property, or maybe you are already looking into the property market, how you should kind of divert yourself a little bit more. And of course, for interest rates, with interest rates falling now, I think it's not a big issue at the moment. It was about 2 years ago when everything was about 4% and everybody was very concerned. And now you can easily get into your interest rate even less than 2%. So with interest rates coming down, it's always an indicator where there is more buyers who are more comfortable to re-enter into the property market. And later on, I will share with you all the exact percentage of who are this group of people that actually are coming into the marketplace at the same time. All right. So of course, we also did some survey regarding GFA harmonization. So many of them actually favors the new harmonization where aircon latch is not being calculated, and the layout is very more comfortable and livable, although the size number does shock us sometimes. Okay, like for example, a 4-bedroom unit can be 980 square feet. Can you imagine that? You see, so I think moving forward from a behavior perspective, you do want to give yourself some leeway to not just look at the numbers, but to experience the space yourself and see whether it is livable or not. So give yourself a chance. And also, we will dive in a little bit also into the housing budget. Okay, we did a survey on what is the sweet spot. And I will show you all a little bit more in depth of this, as well as the preferred housing type, that 4 in 5 respondents actually prefers the condo and ECs. And that's why there's a certain catch-up that as Singapore progresses, right? There's a certain catch-up that a lot of homeowners, they want to upgrade to a private property or even a landed property. You see, and I'm going to cover a little bit more into this shortly. So if you find that you want a copy of this in-depth research where we really dive into the numbers, we give you our insights and our opinion and views, well, then you want to stay all the way to the end of the video, because I will share with you how you are able to claim this report through us. Okay, so I'll just quickly cover some of these key pointers that I believe as a homeowner you want to navigate into the property market. I think these are all important. Okay, so for example, this data actually shows us that today 16% are actually actively looking for a new place. All right, you could be a first timer, or maybe you just got married. You know, there's still a good number of percentage of buyers still in the marketplace. Of course, later on we will also cover in terms of the suite price point, as well as suite size that you should be looking out for, so that you know how you're going to sell in the future. So 25% actually are looking for a new home in the next 6 months. All right, either they have outgrown their property maybe is a little bit older, they want to switch out to something new, or just purely from upgrading per se from a private from a HDB to a private property. So a lot of them, what we realize is that while many of them are actually actively looking out for properties of the 16%, right? many of them are actually looking out for their first home. All right, and because of the increase of population, there's also a lot of first-time citizens who are exploring into the private property market. And not forgetting newly PRs, when they converted from a foreigner to a PR, they actually save 50% immediately, save 55% immediately. Right? If not, if they are a foreigner, they have to pay 60% ABSD, and if when they are converted to a PR, they immediately just pay 5. So 60 versus 5, no brainer. Okay, so these are also some of the reasons why we are seeing very active activities inside the marketplace, where new citizens are buying properties. And today, if you know how to really navigate your way in the property journey, then your property can sell to them. Okay, so this is very important. So out of all this, right, if you can see, a lot of them who are actually planning out for their properties, close to 76% of them, right, actually are looking more for the ECs, okay, or even the condominiums new launches. And many of them, they prefer, 76% actually prefer, out of this group, they actually prefer the ECs or the new launch direction instead, right? So, so this is also something that we use it as a data support to guide us through. Today is not about who is here buying. More importantly, the question that you need to understand is, who are you going to sell to? That is the more important part. All right, so if you know that there's an active number of percentage of buyers always in the marketplace, then you know how to kind of position your property a lot better. Okay, so even though 30% have 29% actually have no plans to move out from their property, but property has been always a very safe asset. That's why many of them are still looking for investments, even though they don't have plans to move. And this is the reason why in the past, it used to be very rare to own a second property. Right now, you throw one stone, anybody out there is already owning 2 properties, largely because of our income has already increased and doubled. Because instead of a single income earner last time, now it has become a dual income earner family. All right, so that's why the support basically guides through the entire process. And I've done a deep dive into who are really the buyers in the marketplace in today's consumer market, right? So I'll leave the link somewhere that you can also check it out after seeing this video. Okay, so very important. I mean, why am I sharing with you this? Because if today you are the 16%, you're already actively looking for property, or maybe you are the 25% planning to upgrade yourself, or even the 29% that you already are very comfortable where you are because your kids are studying nearby, but you're looking out for an avenue in a very safe environment to build up your new assets and the total value of your portfolio, right? Then today you need to adopt the no guessing. Okay, you really cannot guess your way into the property market anymore. And you really need to have a strategy. You need to have certain research. You need to have certain numbers to kind of back up some of the things that you're going to make decision. And not that you cannot choose what you like, but what if you have this extra layer of consideration factors to kind of layer in together with what you are looking out for? Would it help you to make a safer decision? All right, so because we have seen a lot of changes in the marketplace, be it layout, be it sizes, be it harmonization, that if today you are not careful, you may be going into the wrong trap and you'll be stuck there. Okay, so this is something that's why you want to continue watching the video, because I'm going to share with you there's a few key things in our survey and report that we have done that potentially can help you. All right, so if you have not subscribed this channel, like this video, or even put on the notification bell, very important. All right, put on the notification bell so that every time when I do a new video, you'll be notified, and then you can get the latest updates that our community usually get first. Okay, so remember to just do whatever you can. All right, so one of the key things that if today you are kind of looking out for some of these new launches and you wanted certain help, just always take note that because of the new insights of some of these layouts and sizes that you can see from Prominent Peak, even River Green, there's a lot of different changes already. So you do want to take certain form of information and data to guide you through on what type of size, what type of price is safer for you. all right, which is we are going to uncover after this. All right, so if you are looking at some of these launches or you do not know what you are going to go for, then you can also scan the QR code and seek a second opinion from us and let us see what we can do to guide you through your property journey process. Okay, so one of the key data points, I think this is where it gets very interesting. Sometimes we are purchasing property based on our own thoughts and our own thinking without understanding where the market is heading to. It's like you want to drive a car, but you just want to read the manual book. Although the manual book already tell you exactly what to do, but you choose to put it one side and then use your gut feel to start the car. Okay, so what we are trying here is to provide you this additional manual book that you can adopt and use it and layer on with your gut feel, right, to come out a more foolproof decision-making process that for your own self and your family. So what is this information about? Okay, let me share with you some of this data that we have done to layer on. So a lot of us, when we are buying property, we're always looking for what? Location, the budget. So where this information tells you is that actually today, based on the negative attributes of some of the properties, right, a lot of them actually are thinking that the properties are a little bit too small, being the main factor. And you can't blame lah, because if they are continue building the bigger units, right, and the PSF prices are already so much higher, we also cannot afford. All right, so that's why there's always this measurement of balance between size as well as price, whether it can be affordable. And because it needs to become affordable, the strategy of the developers have to keep the sizes tighter, more compact. Okay, as we have seen in the most recent few launches, the sizes are really something that we are not used to. It was so not used to. But from a livable perspective, from a household, the environment, the layout, the efficiency, I think that is a very interesting element that the developers have done, which is still doable. Okay, so these are some of the negative attributes of the current residents. And too far from work, all this, if you ask me, anything besides the too small, the rest can be solved by you accepting that you need to change out from your location. Okay, so then we will look at the 5 top attributes that today, if I want to upgrade myself, I want to move myself out, what are the few things that I want to consider? First top is our close to MRT and bus interchange. Price is reasonable and within budget. The property must have right amount of space. Okay, so this is very interesting on the third point. You see, even though everybody is complaining about size, but when it comes to the attributes they want, they want the MRT more. You see, so what does this tells us? I'll share with you in a short while. And for the fourths, a lot of them due to different age group, depending on whether you need the primary schools or not. And commercial amenities, surprisingly, is not the most important. Although there are always a lot of homeowners who are always looking for integrated property, or they just need to have a mall beside. But if you look at from a general responses, the closest to MRT, transport hub, bus interchange is still the top. So why am I sharing with you this? Why am I sharing with you this data? Because this information will also help you to decide how your next property is going to be. Does it make sense? With this extra layer of information that you know that, okay, today the closer to MRT seems to be the top priority for most homeowners, then this becomes a unique point that your property must have. It's not even a could have, maybe have, it's a must have. So this allows you to have a higher chance the day that when you wanted to sell the property, the buyers will want to accept that this is a key trait of the purchase when they are buying your property. All right, so this is extremely important when we are gathering data. It's not for fun's sake. It's really to kind of allow us to project what potentially is going to happen. Because if let's say today you are buying a property and then you just base it on, oh, today because of the mall or because of the hawker center, I buy this property, will your next buyer be looking at that as their priority? Or I would say everybody got different priority, but which one has a higher chance of priority that maybe the mass market, a bigger audience group are actually looking out for? Does it make sense? Right. So this is why we drive data like this to kind of layer on, not just about I prefer this area, I prefer this location, I prefer this kind of site. we want to layer more things on it. All right, so if you have been following me, one of the key statements that I've been always sharing with a lot of people is also to kind of understand how can we have flexible in our purchase of property. So with the next information, right, let me just share with you the property type preferences between 2023 and 2025 has also changed. Okay, I think this also gives us a good indication of how the consumer market has really adjusted. And based on this, there's a slight drop between the new launch and EC market, if you can see. All right, where else the HDB market has jumped tremendously higher. I think this is also largely due to the reason that maybe the sizes of some of the newer condos or even ECs, they do not accept. They are unable to accept as we get out from COVID and we wanted more space. So size becomes a issue. And when you want to go for higher, bigger unit types, then maybe the price point is out of your reach. You are being priced out. And that's the reason why a lot of them may just drop by to either an older resale property or just go for a HDB where you can have humongous space. Okay, so if space is really your top priority because of family size or, or you need space for the kids to run around, then that is your priority, which you need to exchange it with something else. So the key thing is that we need to kind of balance up on the weighing scale. If I want priority for space, then I need to accept that maybe perhaps my convenience for transportation may not be as good, example, or perhaps the amenities around me could be a little bit further away. So you must know how to kind of weigh this weighing scale, and not everything is on one side. Okay, that is the worst way to make a decision in property. So this information also tells us that today, while a lot of homeowners aspire to actually upgrade to become a EC owner or even a condo owner, okay, about 80% of them, 80%, let me see, yeah, 80% of them, or 80% of them actually still prefer EC and condo, whether it's a resale or a new property. So we believe that there's a gradual shift in property type preferences at the same time, and this will affect your purchasing habit. All right, a lot of times we just buy based on what we like, what we want, nothing wrong. But if you want to put in on another layer to also think of what the next future behavior is going to be in the next 5 to 10 years to help you buy better in terms of a property, then that could be also another consideration factors. So based on this, we are also seeing that there are also people who are actually going for resale HDBs at the moment, even though some of them are already crossing the $1 million mark. But again, HDBs, I think, is a very easy access that wherever that you have done, you can easily just go back to a HDB. And which is why in one of our strategies in our consults, in our REM method, we actually developed a plan to use HDB as a last asset. Okay, so if you are curious about how we actually adopt HDBs as the last asset in our property journey, right, then you may want to also kind of reach out to us, and then we can share with you, see whether are you fit into this kind of situation that we can help you to plan your property better, so that at the end of the day, you still own a HDB for you in terms of your retirement or even for your end of the journey of your property. All right, so with this extra information, right, the next thing I'm going to share with you is also very important. It's the preference on home living space by square feet. Okay, and this is where the numbers play a part in terms of your size. So sometimes when we are going for properties, who don't want the biggest? Okay, who don't want the highest floor? Who don't want the best location at the cheapest price? Correct. But unfortunately, it can never be that approach. So with this extra data, we are able to understand today, if I'm going, let's say you're going for a new launch property, is there a sweet spot of size type that you want to get yourself into so that you don't get too small, where maybe the smallest audience, should I say a smaller group of buyers will be able to accept, or you don't want to go for too big, because when it's too big, not that the space is no good, but maybe the quantum is a little bit too high, which I will also uncover the quantum in a short while. So stay on to this video. So here you can see that between the average, we are talking about maybe the 800 to 1,002 square feet averagely is where the majority of people would love. to have. But this is just purely on size. It's not about the price yet. Later on, we will try to match the price and the size together. Then you can see better. So thinking on, let's say, averagely, let's say we're talking about $2 million budget. That means a sweet spot between $800 to $1,200 per square foot should range maybe between 1.6 K per square foot to maybe about 2,005 per square foot, depending on where it is, whether you buy a new one or resale. But this is just to give you on average for a $2 million price point. Okay, so the sweet spot is about there. So today, how can you use this data to your advantage? Is today, if let's say you're going for a property and you have the limited budget that you can only go for, let's say, let's just use a different color. Okay, let's say you can only go for a 406 to 600 square feet unit. Not that you cannot purchase this property. Okay, this data doesn't direct you that, but you do need to give yourself some extra layer of understanding that your audience group would definitely be smaller. Okay, be smaller in that sense, because a lot of times when we are going for the 400 to 600 square feet unit, right, we know that they are just the one bedroom, or maybe maximum give you a 1+ study. Right now, you do see some of all these sub 500 over square feet to become a 2-bed, 2-bath, and some of them even a 3-bedroom. Currently, we're seeing in the marketplace. That's why whatever I'm sharing with you in terms of sizes is not a blanket statement. Please, different locations, different harmonized or non-harmonized, all these things do play a part as we help you to digest all these facts that is out there before we make a decision. Okay, so I think this is important. So based on this, then you can see that, okay, today, if let's say you have the capability, then you may want to go for a slightly sizable one, because majority of people will be able to accept that. And if you want to have an in-depth, more understanding about how size and price is going to kind of affect you by knowing this data, then you can actually reach out for us to help you out in to understand this a lot better. Because when we are looking at the pricing, right? So here you can also see from a pricing perspective. Okay, let me just come back to this. Yeah, okay. So from a pricing perspective, let's say we are looking at 2 million range. Okay, let's say we'll talk about this group. Then you can see that actually a majority of them will want to go for as big as possible at 35% percentage, will want to have that, you see. And using this extra data, it guides us through in terms of affordability, how long you intend to hold on to this property for your family, as well at the same time, what kind of price point you should enter so that you can exit. So to give you an illustration, so even though 1.5 to 2 million kind of is a sweet spot in terms of a bigger type of unit, but if let's say you are able to buy a 1.5 million to 2 million, but you are going for a 1-bedroom unit, then your audience group is going to be very small. Okay, it's going to be limited. Okay, let's not use the word small, but limited in terms of audience base. Why? Because if let's say you are paying for 2 million and you're buying a 1-bedroom unit, your rental that you are going to fetch, is it going to be high enough to cover quite a fair bit in terms of mortgage or even your maintenance, your property tax? So all these are consideration factors with data. We are able to kind of use it to understand better. Not that 1 bedroom is not good, but when you want to choose this, then you must understand where the demographic of your next buyer, your tenant, is going to be. Not just about, I got the money, I just buy. Okay, I think that is a very unsafe way to actually look into property. So using this data, we are able to kind of understand that today, let's say we use a 1.1 million to $1.5 million price point, right? Hey, that means using this, if I can get a 2 or maybe even a compact 3-bedroom, I think we are very, very safe. All right, the key thing is we want to inject as many layers of data points, research, to lower down our risk as much as possible. Okay, we can't have zero risk in property, unfortunately. Anything we do sure got risk. But can we have some of all this information to lower down as much as possible? Or because can you imagine if you are deciding your purchase or your sale without some of all these extra layers? Will you be feeling more confident? Will you be feeling safer as you are going through your property journey? Or are you making Yes, are you guessing your way in the property market? So this is something that I believe that when we have this extra layers of information, it does give you a better glimpse about how you should enter and how you should exit. So that's why we are sharing with you some of all this research that we have done. Now, of course, this is just the surface of information. We have more data points that go even deeper into each specific property type, each specific price point, to kind of help us navigate ourselves into the property market. So for example, let's say today, even if you have a lot of money, you want to go into the 3 million to 5 million price point, then you are getting a 2-bedroom, 3-bedroom types, then maybe you will be in trouble when you want to exit in the future, because those with 3 million to 5 million, they are definitely looking for even a bigger type of units. And that's where you will match the price and the size to see how you can match up with one key objective, so that when you want to exit the market, you do not need to hope and pray that your unit nobody takes. Okay, so this is where why is it that our properties, even our clients' property, we're able to help them to swap out very easily, very comfortably, and they are able to re-enter the property market and redo it again and again, because we have a lot of data points and research that we have done to guide them through. So if you find that today this video really is something that you have not heard before, and these are all new data points that you know that is going to help you in terms of your property journey, or perhaps you are kind of intending to go into the market, be it resale or new launch, and you kind of see that, hey, this information actually will help me to kind of understand the property market better, how your entry and exit is going to be, as well as the consumer behavior moving forward when you're keeping a property for the next 5 to 10 years, what kind of narrative you should do, what kind of storyline you should go for, and what kind of price or layout and size you want to purchase. You can always scan the QR code, seek a second opinion from us, and let us guide you through the process, not just about guessing your way into property. Or you can just DM, scan the QR code, you just DM survey 2025. All right, you just survey 2025. My team will get in touch with you, and we will see whether this report that we have can actually help you out. And besides just sending you the report, we will also be able to go on a quick call with you for me to kind of understand how I can actually guide you through using this report in your own property journey personally. All right, so scan the QR code, type in survey 2025, and I'll be getting in touch with you for about 15 minutes or 20 minutes kind of phone call, and let's see whether I can give you more insights than just the report. All right, cheers.